Good morning, everyone. Now I am going to explain the next topic, direct and indirect tax. Direct tax. Direct taxes are imposed directly on individuals are entitled or a part by them and by to the government. These tax can be shifted to other base of taxation. Direct tax are levied on specific source of income, wealth or assets of individuals or business. Examples include the income tax, corporate tax, capital gains tax, property tax, and wealth tax. Progressivity. Direct tax are often progressive in the nature, meaning that the tax rate increase as the taxpayer income or wealth increase. This is usually achieved through the tax breakers to progressive tax rates. Business revenue. When the business sells products or services, revises payments from the customers. It represents the receipts and income of the business. Interest payment. When the individual receives interest payment on saving account, bonds, and other interest-bearing investments, it's considered the receipts of interest income. Royalty payments. Next one is royalty payment. Musician, artists, and other creators receive royalties when their works are used to sold. When they receive payment from their royalties, it's considered the receipt of income. Next one is capital gain. When individuals sell as assets such as real estate, stocks, or other investment at the profit. The process of the sales representative receipts and receipts of capital gain income. Taxpayer burden. The burden of the direct tax falls directly on the taxpayer. They have clear understanding of the other tax liability as they are requested you to calculate and pay tax burden on their income, profit, as assets. Equity. Direct tax are often considered more equality as the based on their taxpayers a stability to pay. They can be structured to residential wealth and promotions, social judgment tax higher income individuals or business or higher rates. Tax compliance. Direct tax may be immovable from complications of procedure such as maintaining the record, filing tax returns, and understanding the audit tax authority of the monitor, compliance, closing resource of accuracy and frames. Indirect tax. Indirect taxes are imposed to the purchase of consumptions, goods and services rather than the directly on individual are entitled. These taxes are collected by the business or intermediates the process by the consumer through the price of the goods and services. Next one is basis of taxation. The indirect taxes are typically levied on transactions, consumptions, or the productions of goods and services. Example including the value-added tax (VAT), then sales tax, excise duty, customs duty, and tax. Next one is shifted ability. The indirect tax can be shifted from the seller to the buyer, meaning but the burden of the tax can be passed on to the consumer through the higher price of the goods and services. Regressivity, including the tax can be regressive nature, meaning that they are impose a higher burden on low income individuals relative to their income. This because lower income individuals spend their properties to the tax goods and services. Revenue creations. Revenue creations also included in the economic impact. Indirect tax can be influence the consumer behavior, production, direction, and market dynamics. They can be direct economic investments, affect price levels, and the impact of source allocation of the economy. Then summarize the indirect tax can be levied on the individual or entitled based on their income, profits, assets, the goods and services such as tax states advantages. These are the points included in the direct and indirect tax. We will see on next session. Thank you.